Okay, guys. So, welcome to week three. This is the TradeWise Beginners program. So, I'll be walking you guys through something quick now. So, for this one, I'm going to try as much as possible to make it short. We'll run through this and then we'll have a little bit of a practical to do for the last thing I'll discuss so as to get it into your head. So, first of all, keeping it simple, like I said, leverage. What is leverage? Now, the most easy way to understand leverage is for those that are into the real estate business. The way these guys make most money, purchase the houses they want to purchase, is you go to the bank. Let's say you have a piece of property you want to purchase. You head over to the bank, you present what you want to do and the amount of money you need. So the bank can move to charge you maybe 10-20% of the amount. Let's say I want to purchase a house and that house is going to cost me 1 million. Now the bank tells me I need to have 10%, which is, let's say 10%, which is 100,000. When I provide 100,000, the bank gives me the remaining 900,000. I purchase the land, and they give me the agreement is whenever I sell this piece of property, the bank gets back 900,000. Okay, or in some cases they can give you a time limit. Okay, now same thing here is being offered in the forex business. So your broker gives you what we call a leverage, which you have noticed when you were creating your account. Leverage 1 is to 100, 1 is to 200, 1 is to 400, 1 is to 500. Now, basically, what they are offering you is a chance to multiply your money. Now, when you're working with 1 is to 100, it literally means that every $1 in your balance functions as times 100 of itself, meaning $1 will function as $100. And if you have 1 is to 1,000, it means that every $1 there functions as 1,000. If we have 1 is to 3,000, it means that every $1 is working as 3,000. So if you fund $10 in your account, you have $10, your broker sees it as a deposit of $10, but an account balance or equity of $30,000. Okay, that's basically just what leverage is. Now, the reason why they offer you leverage is so that you can have enough room to place the trades you want to place. If not, you won't be able to place trades. Remember that 0.01 is $1,000, meaning if you don't have up to $1,000 in your account, you shouldn't be able to place any trade. But these brokers makes it easy so that you can literally place these trades freely and not have it weigh so much on your account. Are we following? Now, moving on, a margin. Now, basically, margin, there are types of margin. So I will just move on to those ones. And with those ones, you understand what your margin is. Now, margin is basically the expected amount of money you need to have. Remember, we mentioned you having 10%. The bank gives you 90%. Yeah. Same thing functions when you're about to place a trade. Certain instruments, or just that's a certain instrument, every instrument have a required margin, which should be the first thing we should be looking at. They have a required margin, meaning there is an amount of money that is required for you to have on your account balance before you can place a trade on those instruments. Example, gold. If you want to trade gold and your funded account doesn't have up to $10 in some brokers, you can't place a trade. Some brokers gives you room to do that with just $5. Some give you room to do that with just $1. But then again, the amount of money that is required, like if you're trading with FBS, you need to have at least $10 before you can open a trade on gold. Same thing with 10 trade. And this is actually something I believe is supposed. This is how it's supposed to be. So you have a required margin. That margin, that's what is required. The amount of money that you need to have before you can actually place trades on gold. Are you getting me? On any app, any pair at all. Now, moving on, when you actually place a trade on a pair, they will take off some margin, okay? And when some margin is taken off, you still have some remaining. That one you have remaining is what we call free margin. So let's say you have a margin of 10,000 and the trade you want to place on Euro USD requires at least 9,000. You place that trade, it has taken off 9,000 off of your 10,000. You should have just 1,000 of free margin. So if you want to place another trade on gold and that one needs 10,000, the trade won't be able to open. You would always get them telling you not enough money, not enough money. And the reason is not because they don't want to open the trade, it's because you don't have enough margin to open that particular trade. Now, next one, we have margin call. Now, for margin call, you place a trade, that trade is running a huge loss. There is an now, in as much as you have the broker give you their money, they are not ready to lose that their money. At most that they will permit you lose is your own money. So if you place a trade and that trade is into the minus, the broker watches, sometimes they set a drawdown margin of 90% on your account. So if you have, let's say, $10, if you lose 90%, meaning you have lost $9, your trade is at minus $9, the broker does what we call a margin call. They will send you a mail. You also receive a notification from your MetaTrader telling you you have just received a margin call. And they'll tell you account balance is at 90%, 95%, 96%, whichever percent they will show you. They will inform you of the margin call, and they are going to liquidate every single trade that you have. They are going to collapse your trade starting from the highest, starting from the one that has taken the most losses. They are going to start liquidating the trades one after the other until you have enough margin to carry whatever trade is running. So let's say you have 15 entries. They can start liquidating, and then they will leave just 1 or 2 for you. If those 1 or 2 goes back into profit, your luck. If they still continue in a loss and they take off 90% of the remaining balance that survived, they will still kill that one. You get me? That's margin call. Then moving on, types of forex traders. Now in this business, remember I told you there are so many things you can become here. Apart from forex trading, there is what we call the business of forex, which I don't know if I will be covering that here. But if you are interested in getting any knowledge about that, feel free to ask me that in my DM. Yeah. So moving on, there are 2 areas in forex trading. Remember, you can either become a forex trader or you become someone who is a forex businessman. So let's come into forex trading. Now, as a forex trader, the first thing you can become is what we call a scalper. So if you are somebody that doesn't have so much patience to stay in trades, you want to jump in and jump out, you want to be in and out of the market, then you are a scalper. You are somebody that will place a trade and just watch that trade run for like maybe just 1 minute and you are done. You have seen small profit, you just close. Maybe you're holding for 5 minutes, you see small profit, you close. You are a scalper. You can't hold your trades for up to 1 hour, 2 hours. You are a scalper. Okay? And then moving on, we have another group of people that can stay in trades but doesn't stay for very, very, very long. So these guys are called the intraday, meaning within the day. As long as the trade is running within that day, they can hold it. This time can stretch from 15 minutes to more than 4 hours, maybe 12 hours, but at least the trade, they will never hold it more than that day. That trade must must be closed on that very day. So that's called an intraday trader. And then the next group are the day traders. Your day traders are the ones that can place a trade and watch it run for 4 days to few days. Now, most of these, you won't discover most of these if you are still trading demo. Yeah, you will notice a little bit of it on demo, but this will manifest itself mainly when you start trading a live account. Reason being, demo, you have no emotions on it. You can place a trade and leave it there for like 7 weeks without being worried. In short, you just forget it. But if you try it on a live account where you have real money, my brother, you might just go crazy. So it takes you are somebody that has a whole lot of patience to be a day trader. I am not a day trader. I'm an intraday trader. I'm not a scalper. I don't stay just a few minutes. I'm an intraday trader. I can stay for at least some hours and then I'm done. So there are those that are called the swing traders. These are the ones that can hold trades for several days and heading to few weeks. Yeah, please, several days to weeks. It can be several weeks, it can be few weeks. But these guys are the ones that can hold their trades for like 3 months, 4 months. They are just holding. These are the swing traders. Now, before I answer the question that came into my mind, let's move. Position traders. Now, these guys are neither scalpers, nor intraday, nor day trader, nor swing traders. They are position traders. Now, these guys are the ones that are able to look ahead of time, be able to say, okay, in the year of 2025, I'm expecting gold to get into at least 4,000 per ounce, but I'm not going to be buying it until it drops back to probably 2,500 per ounce, 2,100 per ounce before I purchase it. And then I'm going to hold that position for as long as it takes until I get to see that 4,000. That is a position trader. They are waiting for a particular position. They are not doing any other thing until they get that particular position. And then finally, we have the long-term investors. Now, these guys are the guys that tend to see things from the realm of economy. So these guys can stay on one trade and hold it for several years. Remember, the position traders now, this should have been from several weeks to months. So these guys can hold a position for maybe like one entire year or for like 6, 7, 8 months. But the long-term investor can hold one trade for like 1 year to 2 to 3 years. That's a long-term investor. These are investors, not traders specifically. Now, does it mean that anyone here makes the most money? That's a lie. Whichever one you choose, you are going to be killing it. I'm telling you. Yes, a long-term investor can be somebody that wants to, if they invest $100,000, they are ready to wait for 2 years before they can make 10%, which is make 10,000. Your position trader is somebody that knows that if I can take this one position, I should be able to make that same 10,000 in like 4 or 5 months. Your swing trader is the one that can be able to make the same 10% in like few weeks, like 3, 4 weeks, holding for 1 month. Day traders are able to say, okay, within the next 4, 5, 6, 7, 8 days, I should be able to get that money, and they just go for it. Your intraday guy is able to understand that, okay, I'll still be in the market tomorrow. I don't have to make the whole money today. I can just make some chunk of it today, come back tomorrow, make some chunk, come back next tomorrow, make some chunks, and before you know it, I've gotten my 10%. Your scalper is the type that is like, I don't want to be here for too long. Maybe you're somebody that's working. These are the 2 stages I would advise you to be in. If you are working or you are a student, I would advise you go for becoming a scalper. Don't be an intraday if you are a student, please. It's not like you can't do it, but please don't do this if you are a student. I would advise you go for day trading or swing trading, so that if you spot a position, let's say on a Tuesday, you can hold that position till Friday or hold it till the next week, because you are not in a hurry as a student. But if you're doing intraday or scalping, you need to be on the screen. Okay? So if you have that early morning time, you have that 7 a.m. to 9 a.m., you have that 1:30 to 2:30, at least you have at least 3-4 hours that you can spend on the chart without going out, then by all means, become a scalper or an intraday trader. But if you don't have that amount of time, then please go into becoming a day trader to a swing trader. As a day trader, you can place your trade in the morning, leave your house, and know that, okay, if the trade doesn't play out fine, I'll just go home and come back and see a loss. But if it's playing out fine, I should go to work, go to school, go to wherever I'm going, come back and still see it running in profits. Then I can either close in the evening or hold it to the next day. You are at peace with that. Then as a swing trader, you are like, when I enter this position, I know it's going to take a long time. So I'm not going to stress myself. I'm not going to be checking it today. I'll be back tomorrow to see if it has started moving at all. You get me? Those are the areas I'll tell you. Don't say you want to become a position trader. If you want to become a position trader or a long-term investor, you need a whole lot of capital, and you guys might not have that now. So, but regardless, look at your pocket. When I'm talking about capital, I'm not talking about 1 million naira. Please, 1 million naira, how much is that? Just $700. That's nothing. It's literally nothing. So please, if you have maybe $100,000, then by all means, feel free to become a position trader. Feel free to become a long-term investor. feel free to become a swing trader. But if you don't have any of this money and you have the free time, then I would advise you to go into scalping, intraday, day trader, and swing trading. Those are the 4 that I would recommend for anybody that doesn't have so much by the way of capital. Okay? Then moving on, type of market section. There are basically 4 market sections, but 2 are the ones that are important. First one being the London section, which is the regular Nigerian time, our regular 8 o'clock in the morning to 5 p.m. The next one is the New York section that runs from 1:30 to around 9:30 or 10:30. Please ignore the noise. I'm trying to make this video. I'm making this video on Saturday, so my compound, the kids are playing, and I can't tell them to stop because I want to record the video. So endure. Then give me a minute. I think this noise is becoming disturbing. Okay, so the next group is the Asian session. I don't know if I've said anything on New York. New York is 1:30 p.m. Nigeria to 9:30, 10 p.m. Nigeria. And then the Asia session starts running from 10 p.m. all until I think 4, 5, 6, 7. And then your Frankfurt session starts in the midnight, runs until morning, until I think 9 a.m. Yeah. Now, the 2 you observe are the London and the New York. Why? These guys don't move that much, but these 2 move very much. And then sometimes, I can't really explain that here. That's market structure. Now, but anyways, let me just give you the hint. Sorry. The hint I want to give you is sometimes London here will kickstart a move and then retrace it a little, and New York will continue it. In some days, London will start a move in the opposite direction. Let's say today we want to push up. London can come in and just start pushing down. And then to push down, New York comes in and then start tanking upwards. Sometimes the reverse is the case. Are you getting me? So some days they will be working together. Some days 2 of them will just be against each other. It's left for you as a trader to know what works for you. Be sure that you are seeing actual reasons to be in the trade. If you're not seeing the reasons, by all means, don't be in the trade. It happened to me on Friday. That was yesterday. Took a buy on gold and I was seeing good reasons to stay on that gold. But for some reason, I just started feeling some kind of doubt in my heart. I closed that trade. And after closing it, I took my time to review it again and was like, why exactly did I close this trade? I think I was wrong closing this trade. I evaluated, and then I saw it was a good trade. I shouldn't have closed it. But then I was like, yeah, we already made the wrong decision. We're going to stick to it instead of trying to get back in and losing more money. So I just endured it. That trade, I found out that I closed it at a loss of $10, but that same trade ran all the way that if I have left it, it should have made me roughly nothing less than $150, $160. No regrets, but I know, because I know that other days will be better. But this happened around, I saw that trade in the London session, but I was doubting that New York will retrace, not knowing that New York will continue what the London has started. But all this, eventually you will learn either by experience or by our mentorship, our training. One of them will cover it for you. Then type of market orders. This is the one that is going to take me some time, but I want you to pay attention. Please pay attention. Now, there are 2 types of market order. One is the instant execution, which is you just opening your MT5 and just pressing buy or sell. That 2 button that is there. That's instant execution. Nothing special to explain there. Then the next one is the pending order. This is where there is a little bit of work. Now, under your pending order is basically a type of order that does not trigger immediately. You are expecting price to be somewhere before it gets triggered. So let's say you want price to go down where before you got triggered in, you can put that one. Or you want price to go up first before it trigger you in. That's still another option. So those 2 were. First one is called a limit order. A limit order, I'll do examples of these practical examples so that you can actually get used to knowing what they are. But a limit order is basically you timing a limit. Somewhere you want price to go to and then reverse. So let's say we want price to sell, that's drop down. We place a limit at the top side. We want it to go there, target, touch that order, and then start selling. That's a limit order. And then we have another one that's called a stop order, which is we have an area, let's say price is selling already, but we're not very confident about where it is, we can just place orders at the bottom side and say, okay, if eventually the thing start dropping, if you drop and touch that place, it should trigger me in. Okay. Now, does that mean that the trade will still trigger if price does not touch it? No. If the trade is not touched, if price does not get to that limit order or stop order you set, the trade will not be triggered. That means you won't take any loss. So that's under the two of them, we still have buys and sells. Okay, so that means we have buy limits, we have sell limits, we have buy stop, we have sell stop. There is another one called the stop limit order, but I'm not going to be explaining that here, as majority of you won't be using it. But if you still want to know, feel free to get into my DM with the question and I will answer what a stop limit order is. But like I said, it's not really that important. Now we're going to head over to the charts and I'm going to do a practical example of this just so that you can get used to it. Okay, welcome guys. So this is my this is a practical software, a software that we use for training students so that they can learn how to trade even when the market is switched off. So this is a software that I can use. With this software, I can play price forward and I can play backward, that kind of thing. So for this, I'm going to be doing, it's just to show you the type of orders. So first things first, you already know what an instant execution is, so I'm not going to be doing that. I will start with the limit order. Since we have an uptrend here, I'm not going to be doing anything special. I'm just going to set a buy limit to the tops here. That's the high here. Let me draw a rectangle in there. I'm just going to use the high here as my buy limit. So I'm just going to use this area. Now it's not really about the high. I handpicked this area, so I'm just going to take that area as an area for our buy limit. So how do we even set it here? I would show you guys how to set it on your app, but that will be later. I'll show you guys how to open it on your app. So for this place, so I'm doing a buy limit. I'll change it. This is a buy limit. And price, I'll decide the price where I want it to be. I'm choosing here my buy limit, and then I'm putting a stop loss at the bottom here. That's my stop loss and my buy limit. Am I setting a take profit? I think I'll leave the take profit and close it by myself if the trade is triggered. So now you see I've set this buy limit. If you look down here at the pending order tab, it's showing the trade, but the trade has not been triggered, so there's no profit, there's no loss. So we're going to move price forward and see if we can get triggered by the market. Let's see if the market triggers us in. I think I'm going to pause that, it's too slow, and then I'm going to play it forward. Let's see if we get price to trigger us in there. Okay, so while we are waiting for the buy limit, now basically what we're looking for on this buy limit is for price to come in here, touch this line, and then push up. Are you following? That's just the very simple thing we're expecting from this guy. I don't know why he's stressing us so seriously. The guy seriously wants to stress us. This is the simple thing we're waiting for. This is the buy limit, and as you can see, as it has not touched it, this order has been pushing up and I'm not making any money. That's because it has not triggered me in. So I'm waiting for that. But while we're waiting, what we're going to do now is we're going to put a stop order, a sell stop. This is a buy limit, meaning we want when it touches us and is buying, we make money. But since I'm expecting price to first of all sell down here, I'm going to put what we call a sell stop. Now, basically the way sell stops function is you put sell stop. You see, if it is buy limit, you put it below price. Okay? If it was buy stop, I'll put it above price. But if it is sell limit, let's say it's sell limit now, I have to put it above price here. Are you getting me? If I put it below, it will not work. See it. If I put it below, see it's shining red, telling you that you're doing something wrong. So you can't put it below. So it has to be above, and you see the color is fine, telling you that you are doing the right thing. Then your stop loss, if I put it below, it will shine red, telling you it's in the wrong place. But if it is above, then it's fine. Okay, this is a sell limit. I'm just going to put a sell limit. I'm going to still do a sell stop. Sell stop, the way sell stops work, if you put it above price, it will not trigger. They will tell you it's wrong. But if you put it below, then it's nice, it's okay. If your stop loss is below, it's not okay. Your stop loss has to be above. I know this might be a little bit confusing, but we are still going to place the order and see if price triggers us in. So you see the sell stop, the moment it touches the sell stop, the sell appears and the trade is triggered. You can see it down there running in $19 profit. So let's see if we'll get triggered, if our buy stop now will be triggered. So as you can see, we're heading downwards slowly. It's happening slowly but surely. Okay, so now let's see if we get that limit order. Oh God, a sweep. Okay, I think I'll close the sell limit now, the sell stop. I've closed the sell stop because I'm about to trigger this guy now. So let's see if this guy get. Okay, we didn't get triggered. We got close to getting triggered, but didn't get triggered, which I'm suspecting this proportion block in here. But then again, let's see, watch and see if we get a sweep of this low. If we get a sweep, then that might just get us triggered. So you see that's the sell limit. Remember I told you sell limit. This was the sell limit we placed here. Now price has touched it. Is price going down is making profit. If this price continues upward, we will just chop loss straight up. So let's still see if that sell limit holds. Sell side liquidity taken. Let's seek buy side. Oh, sorry, buy side taken. Let's see seek sell side. I don't want to use terms that you guys are not aware of. So I think that one will hit stop loss. You see that? It went up. I'm going to take that back and slow it down just so you see it. You see, the moment it just went up and touched that line, we have collected a loss there. So that's that for that. The buy limit did not get triggered, so I'm currently short of words, or should I say I'm lost at sea. I don't know how to say, okay, let's go about it. And if the buy limit was triggered here, we would have made money, would have made a very, very crazy sum on this one. But that didn't happen, so we can't really kill ourselves. Imagine, my buy limit was on point. My buy idea was on point, but it missed us by, was it by how many pips? Sorry. This is 6.5. Our buy limit was at 5.4. It missed us by 12 pips. So I don't know. That trade is basically not gonna happen again. So I think I'll just delete it. What am I doing? Let me delete that pending order. It's not gonna happen again. It's gone. I really was hoping it would happen. But I hope that you guys know where it is now. So if I want to anticipate another buy, it's not like I'm seeing anything for that here. But let's still see. I want to see if we can get that buy limit. I've shown you a sell limit. I've shown you a sell stop. The only thing that is remaining now is the buy limit. So I think let's just put a random buy limit at this gap here. Buy limit there. Stop loss just beneath here. this is not a good order, but let's just see if we can show you guys that example of a buy limit. Okay, are we getting triggered? Okay, you see that we got triggered in immediately, and as you can see, that's profits. It's running in profits. So okay, guys. Woo! That was a nice one. That was a nice one, right? That was a nice one. So I didn't want to see price go back down, but with the movements we had there, I kind of felt we were going to sweep this low, and we had to fill this gap. You see, there's a gap there. There's a gap between those candles. So that's called an imbalance, or should I say this is called a void for me. Many people will say imbalance, but for me, this is a void, is a market void, is a gap in price that has to be filled. So I had to just target that gap in price, and you see we just got triggered. The moment price fills that gap, we have a balanced price action. There is no need for the market to continue staying here, so it has to just tank up. And you see here, we still have something like that again, another gap in price. Even though price didn't completely come into this one here, it did tap into this anyways. So for them here, they have balanced price. So it means they have filled the gap. They also filled the one here, two of them together. At the moment it was filled, we tanked up. See here as well, another gap here, filled, we are tanking. So this is a nice one. And I've shown you what a buy limit. My joy is the fact that we were able to cash this. So this is a buy limit, as you can see. We placed the order while price was still way up here, and immediately came, tagged us in, and it pushed up. If it continued pushing down, it would have taken us out for a loss. But you see how we just pushed up. So I'm just going to close that trade now. And that would be a nice one for this very account. So I hope you guys literally understood, and yeah, I'm trusting that this was a very nice session. This is an account that I've been using for a while now. So as you can see, the profits made on it is about 4,439. Even though it's just a practice account, yeah. But at the same time, whenever I see what I'm doing on the account, I'm like, man, I'm good. Yeah, I'm good. So you guys should tell me what you think. If you have anything that's confusing you, please tell me what you think. And then if you have anything that's confusing you, feel free to ask your questions. Now, what's gonna be your assignment? I want you to go over to your MT5. Remember, see, in this market, one thing is very, very important. So I'm going to tell you now. See, those who fuck around the most, or that's the word the person that made the quote said. But for me, I will tell you, those who mess around the most learn the most. Why? In this business, the more your mistakes, the higher your experience. But I'm already here. You have a mentor, so you don't really need to make my mistakes. You just need to take what I teach you and go put them into action. As long as you're putting them into action, I can literally tell you that yes, you would make progress very fast, like literally very, very fast. So guys, I want you to take your phone, go over to your MT5, start trying to place trades with your limit orders. Okay, do it on the 1 minute time frame, please. 1 minute time frame. Do something like this on the 1 minute time frame, or highest 5 minutes time frame. The reason I'm telling you to use 1 minute and 5 minutes is so that you can get to see these things trigger. Okay, yeah, just feel free to place them at random areas. You don't have to be a pro to do this. Place the trades at random areas, just see what they look like. Send a screenshot of the moment you place the buy limit with the stop loss and the TP. Screenshot your chart so that we can see it. And if it gets triggered, send it in so that we can congratulate you for mastering how to set it. Okay? Feel free to send it in the group. You don't have to send it in my DM. Feel free to send it in a group. But if you have questions, drop it in my DM. And you can also drop it in the group as well. But at the same time, remain blessed and have a great week. I believe today is Monday.